So the company that I decided to analyze was Kellogg Company. It was founded in 1906 and can be found in over 180 different countries around the world. They just make ready and convenient foods like granola bars and cereals and stuff. But they also have a lot of brand names underneath Kellogg, which is things like Pringles, Cheez-Its, and Famous Amos. And they grant licenses and all that stuff. But that's just some background. I recommended a buying rate on Kellogg stock, and I'll tell you why. With the analysis part of it, with the historical price of Kellogg's stock, the highest price that it ever was $86 in 2016. And the reason that it was so high was because there was a big movement in society to have healthier foods, and ready and convenient foods aren't usually that healthy. And so Kellogg kind of tried to implement this by putting quinoa and stuff like that in their cereals and their granola bars to try to move with this movement so that people would favor their products over others. And so 2016 was the year that it came out on top with the highest stock price. 2018 was its lowest that it had ever been, and that was an 8.1% drop from 2016's. And so yeah, it was a huge part of it, the huge part of that drop was the fact that they changed their packaging and stuff, and they had just business costs that they had said that they need, such as portfolios and all that really set them back. But 2018 was it was really hard to analyze 2018, and it was a pretty crazy year because although they had their lowest stock price, they had their highest net income for that year. And their revenue had actually dropped by $560 million the year before, and then it just spiked up in 2018. And so having that high net income, even though they had a ton of expenses, like I had mentioned before, in that same year, but the highest revenue overall over the last 5 years was in 2019. And so that looks pretty promising for the upcoming years. But like I had said, they had decreased in their expenses, or increased their expenses in 2018 over the lifespan, but revenues were their highest they had ever been in 2018. It was so crazy analyzing this because their profit margin was the highest in 2018, where it came in at 17.74%, but then their lowest profit margin over the past 5 years, and that was for one quarter, that was for the first quarter in 2018, but by the third quarter, their profit margin was negative 2.53, and they had started to implement those changes in packaging in September, and it started being effective in October. And so you can see how that totally changed their profit margin. So they still came out with the highest net income and the highest profits and profit margin in 2018, even though they still had some of their lowest profit margins and profits in that same year. So that was a really crazy year for Kellogg Company. It was like they were doing so well with their profits, they were hitting their peak, and all of a sudden it just tanked completely, going down by over 20%. But Kellogg's PE ratio has been really inconsistent these past 5 years. So its highest was actually in 2015, so the beginning of these last 5 years at 58%, and it has just steadily declined since then. But its ROE has actually been the lowest it had ever been in 2015. Its ROE has kind of been all over the place, but as years have gone on, it's kind of increased. In 2018, it was actually its highest it had ever been, at almost 70%. So that was almost unheard of to have ROE at 70%, because the company, or the market average for the business that they're in right now, Kellogg is in, is actually 12%. And so they ended up peaking at 70 and then dropping down again, and coming in at 22% in this last year. And so 22% is still way above the average, but it was cut in over half from the year before. So they've been pretty consistent with everything except for their PE ratios these past 5 years, whether that's steadily decreasing or increasing. They've been pretty consistent. But when talking about the competitors that Kellogg has, Mondelez is their biggest competitor, along with General Mills. They all make ready and convenient foods. Comparing these three companies, Kellogg is actually doing the worst out of the three of them in every category except for ROE. They have been dominating their competition in ROE. Like I had said, they were at almost 70% in 2018 and then dropped down to about 22% in 2019, which it was a little closer to 30 after, actually. 22, it had been increasing and then kind of stopped, so right now it's about 30%. But yeah, they kind of fall short in just about everything when it comes to their profit margin and their earnings per share. ROE is really what sets them apart from their competition. But in my recommendation, I do recommend buying stock for Kellogg, but if you're looking for a better competitor in this market, I would recommend buying Mondelez or General Mills, just because they do perform better and they are doing better than Kellogg. But for the future, the company is looking pretty good with the market and how it's going right now. Their growth is forecasted this year to be negative, so they are going to downsize a little bit. But I think most companies in the market are for this year are forecasting to not grow as much because of the setbacks they've had at the beginning of this year, that they're just gonna kind of try to recover from that. And so it would be really not logical to grow. But they are saying that they're looking to have a revenue growth of 4.12%. And so even though they're getting set back, they're also going to increase with their revenue, so that would set them apart as well. And so they're looking pretty good, and that is why I recommended a buying stock for Kellogg's. So Kellogg, if you're a big investor and you're wanting huge returns, Kellogg really isn't the company to invest in. It's mostly just that it's a smart and safe investment with consistent returns, and that's why I recommend buying it. The market is pretty bad right now, and so they're cheap, and so that's why I recommend buying them right now, because you'll get your returns back. And yeah.